It's top of the hour. Let's get started. Hello, everyone, and thank you for joining today's MasterClass. I'm Danielle Patterson, founder and CEO of Family Office Access, and I'm excited to welcome you to today's special edition. Today's guest is Arthur Bavelas, a serial entrepreneur, investor, and the founder of both BavelasGroup, his family office, and Family Office Insights, a private peer-to-peer network trusted by thousands of family offices. Arthur has worn many hats. He's been a startup founder, an advisor, an investor, a community builder, and his work connects founders with aligned capital through a model rooted in trust, curation, and meaningful relationships. Today, we're going to explore his journey, what makes a pitch resonate with sophisticated investors, and what he's built to support entrepreneurs and family offices alike. Before we dive in, a few housekeeping notes. Feel free, if you haven't yet discovered our chat, it's a great place to network, introduce yourselves. I've also made sure to enable our Q&A. So if you are not as familiar with Zoom, at the bottom, you'll see the Q&A. And this is where, so that things don't get lost in the networking shuffle, you can drop any of your questions. We hold these live so that we can include you all in today's conversation. So I'll do my best to monitor that as we go through our conversation. And with that, I would love to welcome Arthur. Thank you so much for being here, Arthur.
Super privileged to be here, and thank you for having me. Excited to have this chat. It was nice to talk to you several weeks ago and have an idea of. I know that I've been keeping a bead on you for a while, and I'm glad to see things are moving along nicely for you. And this is suggestive that you've been working hard at it, not just in how organized you are with this, but how many people are participating on this right now. It's pretty impressive. Good for you. Congratulations.
Oh, thank you. Thank you. It's quite a community. So thank you to the audience. I know, time is our most valuable asset. So thank you all for being here. And yes, Arthur, thank you for sharing your wisdom. I'm really excited. I've been following your work, and doing these things is so much fun for me because I really get to know you, our guest, on a more intimate level, and of course, share your expertise with the audience. So with that, I'd love, for those who aren't as familiar, to kind of go back in time. I know you've built and exited a successful company, and can you kind of take us back in your early career and share with us what led you to launch your first business, and what was that exit experience like for you?
Yeah, so I appreciate you allowing me to tell the story because it's one of those stories where I couldn't have. First of all, I'm a bad planner, and secondly, I couldn't have planned it any better. And a lot of this happened by accident, which is often the case.
Always.
So I was in suburban Philadelphia, raised my kids there in Villanova, outside of Philadelphia. It was an amazing place to raise kids. I started a little company, and then a friend of mine came to me and asked me whether I could build a billing, collection, and claims adjudication system for an HMO. And I go, I don't even know what you just said. And we were playing golf. Was playing a lot of golf at the time. And he said, well, I work for this healthcare system. And at the time, there were a lot of disparate, HMOs and affinity groups where you could buy health insurance if you were part of the in this case, it was the Francescan healthcare system. And so there was, little pockets of businesses, and that consolidation happened over time where they were all bought up and absorbed by the big ones. But I ended up grabbing a friend who knew how to build what I just said and what he asked me to build, and he had a small budget, and we actually built something that worked. And so I was the business development guy, and he was the technologist. And so what happened is over a series of years, it ended up working. And we actually built the technology on the time on the back of DBase, which was, old school, right? And it actually was an integrated system where the HMO could bill, collect premiums, and do all the work to adjudicate claims in one spot. And so they helped us. They were our primary investor, and then they helped us get more of those contracts. And At the time, I wasn't really keen on paying the lawyers that I had to build that contract with that investor and customer because it was super expensive, but it turned out to be what saved us. So the long story short, this is why it was by accident what Family Office Insights, for example, was built. But
Yeah.
several years into it, we had a bunch of customers, and one of the big healthcare companies came in and bought out a bunch of these companies, including our customer and investor. And they said, we either have to keep you as a vendor or buy you out for the net present value of the future revenue stream. And by the way, we're not going to do either one of those things, and we're going to outlawyer you. Like they actually said that. And so this was
Wow.
early on in my entrepreneurial career. And
Yeah.
it was hard for me to believe that somebody would be so harsh, but it turned out that and so they just kept on coming back. And we went to court, and the judge was super friendly to, entrepreneurs. And they ended up settling for exponentially more than we otherwise would have got had they just paid us out. So
Amazing.
yeah, so that was, David Goliath's story. I mean, they just tried to crush us, and they could have easily done it, but we got lucky.
Oh, thank God for that lawyer.
Yeah. And so what that did is he bought me some time, and also I had, a little stash of cash, and I really didn't have any idea how to invest. Like it wasn't, I didn't come from the wealth management background. I didn't come from money. I didn't really understand all that stuff. Not to suggest that I understand it now, but I certainly understand more than I did then. And what I did is I knew a lot of really smart people that were entrepreneurs in the suburban Philadelphia and Philadelphia area. And so I would just lean on them when someone pitched something to me and said, we're raising money for this. I was able to call up a friend who had made their money in that domain, for example, and they would say, nope, next, or yeah, this is a good one. And so that was the genesis of the accidental formation, several years later of Family
Yeah.
Insights. So I was able to lean on others for their domain expertise that helped me. I've had spectacular losses in companies that I've invested in and so forth, but it helped me have less of those, right?
There
And
you
so
go.
that fast forward to, my kids went to college. I moved to New York City, and there was about 175 people that we were trading notes. That was an
Yeah.
evolution from that original construct. And then several years after that, it made sense to, because people started forming family offices. Back when I sold the companies, we didn't even know what a family office was.
Yeah.
Maybe Rockefeller Group was around, Rock and Co. and all that kind of stuff, but we really didn't know. And so
Yeah.
it started becoming prevalent that people would form their family offices to manage the disparate assets of multiple beneficiaries and all that business. And so, we started, many of those 175 people were in New York, just coincidentally, not just suburban Philadelphia. And so they were forming their family offices. And so we just put a deal flow group together a bit more organized than it was prior, like, because it was just us communicating back and forth. At the time, that became vogue to have um, uh, deal groups where you would invest as a group and, pool your money. But that's not what this was. This was just trading notes. And
I
so,
love it.
and so Family Office Insights has pretty much been the same in that we're not aggregating money and in deploying it. We're just, fast forward to today, we're just a place where family offices can look at deal flow, whether it be a fund or an investment, and do it in a nice, comfortable place where we're not chasing them to get our commission. We're just charging people to pitch to family offices. And it's just one of many ways to create a nexus of connectivity to hard to get to people. So
Incredible.
yeah, and so
You
it is been really good for everybody. It's been good for the family offices. It's been good for the people that pitch. It's been good for me because people take my phone call, right?
yeah,
And
absolutely.
so it's been about 13 years where we stood up the website, gave it a name, and in without prolonging the story, it's not a scalable business in any way, because before COVID, we were doing in-person pitches in a
Mhm.
conference room in Midtown at a law firm, for example. And, you only can do so many of those. There's only so many Tuesdays, Wednesdays, and Thursdays. And the same is true post-COVID with webinars that we started doing and continue to do. So the long and the short of it is we get 200 applicants a month now, and they largely come from the members of Family Office Insights, which is a very large cohort. And so many of the people who apply come from the family offices themselves, because family offices are
Mhm.
invested in things that they want others to know about and potentially co-invest. And so the
Yeah.
filter's pretty good. The challenge is that we only can pick 12 or 15 a year. Depending on the month, or excuse me, 12 or 15 a month, depending on the month. December, January, summer, complicated. So it's been a nice, comfortable place for family offices to look at deal flow. So
This is
that's the
incredible.
genesis of how it all came about.
Well, what an amazing story. And honestly, I joke as well. I was an art major in California. Did I ever think I'd be a tech founder living in the Carolinas in the world of finance? I think my husband loves this saying, you want to make the gods laugh, tell them your plans. Because
Exactly.
I
Yeah.
just think opportunity comes out of chaos. And it's when you say yes and you work hard and you show up and you have integrity that things really start to unfold. And I love your story. And I love just over time, really what you've created in this circle of trust. And from my perspective, I've really seen the family office sector transform into something so collaborative. And it makes perfect sense because, many people make their wealth in one domain, but they're not an expert of all things. And, if you're successful in life, I can trust you. And I'm sure there's a vetting process or something around who's in your club and who attracts who.
Yeah, it's
Um,
pretty easy to figure out whether people are legit or not. And there's always people trying to get their nose in the tent, so to speak. And we don't dismiss those people in terms of um, we let them come in the part. They're not members of Family Office Insights, but they can subscribe to our stuff and see what we're up to, but they can't come
yeah,
in to the pitches and, for example, solicit the
yes,
the people who are legitimately investing in things.
yeah, amazing. And so, gosh, with 200 deals coming your way every month and really only being able to feature, a small select amount, do you have to rely on a team to do the vetting? Do you look at every deal yourself? Are there certain sectors or structures that you're attracted to?
Yeah, it's a fair question. And without offending people, I try to do as little as possible. Um, in terms of my bandwidth, because I spend most of my time just as a private investor. So,
Yeah.
I am busy doing other things. And so we have a staff of people. There is a formal review process, uh, but we can be bought. And what I mean by that is whether somebody gets approved or not and gets to be able to pitch is a function of, do we think it makes sense?
Hmm.
Some stuff is easy to say no to. And
Yes.
the other part of it, which we weigh heavily and we admit it, is where it came from. Like
Yeah.
if it came from people that we know and understand, and yeah, we don't spend a lot of time. I don't want anybody to think that we're doing deep due diligence and setting up an SPV and asking people to vote with their checkbook and something that we're going to participate and profit from. Um, we're not doing deep due diligence in these projects or companies or funds, but we have a pretty good lens that we look at them through. And like I said, half of them go away because they can't afford our 3 or $16,000 that we charge, depending on what people do.
Right.
How many pitches and that sort of thing.
Almost vet themselves. Right.
And then so that cleans out half the people because it's not the right time. They don't have the budget. They're too early. they're
Yeah.
raising $500,000 and we're going to charge them 10, right? Doesn't make the math
Right.
doesn't work, right?
Right.
And then, like I said, there's some easy no's because this is dumb. Like this doesn't make any sense, right?
Yeah.
And then we look at it and say, okay, where did this come from? Take a look at it, and then we can only pick 12 or 15, like I said, and so we just it's not that we need staff people to do it, but it's not that as consuming as if we're doing background checks on everybody and writing a check ourselves, and so we're going to look at all the documents, and it's not that much of
Yeah.
heavy lifting. The heavy lifting part of it is the invitation process, organizing it, because we're doing 2 or 3 a week sometimes.
Yeah. It's a
And so
lot.
we have to make sure, we don't drive people crazy with invitations, and we give them the right data, so they can say, nope, not for us. We're not even going to show up.
Yeah.
Yeah,
And tell
20 to 30 people show up.
Yeah, and tell us how that process works because I'm sure, the deals, maybe they're direct deals, maybe say they're med tech and, the whole community of a very, very large community. But each week, do those particular deals that will be featured in the webinars go out to the entire community? And then those that are, oh yeah, that looks really enticing, I'm going to join. And you get, 20 to 30 live investors on the call. Is that how it works?
It's a big fat depends.
Yeah.
I don't want to give you the lawyer. I'm not a lawyer, but the lawyer answer that is
I'm
usually
not either.
depends, right? Um, so, and this is not, I want everybody to know that I'm a customer of yours, but this was not, we didn't talk about this, or this wasn't designed as a
No.
quid pro quo or anything like that. But at one time, we spent a lot of money, like
Mhm.
hundreds of thousands of dollars, to
Yeah.
try to get people to tell us what they're interested
Yes.
in addition to what they told us when they first became members. And by the
Yeah.
way, we don't charge anybody to be a member. We just,
That was another question.
yeah,
Yeah.
you just have to be legit. And so when they sign up to be a member, they say, we're interested in this, this, and this. Well, it's super static because there's nothing to compel them to come back and change that. So we
Yes.
put an effort underway, like PitchBook, for example, to go and ask people, okay, you said you were interested in this. Are you interested in something? So we could be more targeted, which is one of
Yes.
the reasons why I'm a customer of yours, is because you do that work.
Yes.
So
Yes.
to answer your question, sometimes we invite everybody. Sometimes we invite a small segment. Sometimes we have enough information on a segment of the group that we know these people are just real estate. And so it's a real estate thing. So let's focus on that. And, we might send one invitation out to a wider group of people, and then the
Mhm.
next two only go to the real estate people, right? Um,
Yeah.
and so it's not super sophisticated. So I don't want to represent that it is, but it's targeted on some
Yeah.
level most of the time.
Yeah.
Yeah.
No, it's super interesting to me. I'm just a very curious, as you can tell, all the questions. But
Yeah.
um yeah, it's fascinating. So as you're looking at the deals and as you're vetting and there's some easy no's. What is just a clear deal breaker for you when you see it? I know you said if they're just not raising a significant amount, if they can't, go through the process and afford it. What else, is people here who are raising and looking to, present themselves, what are some red flags or just immediate deal breakers when you look at these pitches?
Yeah, I wouldn't call it, I can address some red flags, but first let me say we're largely North America.
Okay.
And so while there's great family offices in other parts of the world, and we have a bunch of them, the preponderance of our members are North America and are not interested necessarily in investing in India or Europe or Brazil. So we just that we tend not, we get a fair amount of that where people want US investors to be in other jurisdictions, and we've done a few, but we're
Hmm.
realistic about it, right? The
Yeah.
cohort for that type of investor is not that. So it's not a red flag, but it's just we don't want to waste people's time, waste their
Yeah.
time pitching, and waste the membership's time and giving them things that they're not particularly interested. And then the again, it's not necessarily a red flag, but we look at 200 a month, right? Or
Yeah.
100 of the 200 a month in earnest. And just because you have a fancy deck doesn't mean you know cross the line and could get a serious look. But if your
Hmm.
stuff looks like shit, then you really weren't very thoughtful. And so stuff like that isn't easy, and we don't get much of that, but it's
Right,
sort
right.
of it's annoying because it wastes our time. Like, even though
Yeah,
I'm saying we're not doing deep due diligence, we still have to look at the stuff, right?
absolutely. Yeah,
And like you said at the beginning, your time is our most valuable thing. And so we want to just, treat it as such. And, we only have so many people and so much bandwidth and so many hours in a day to look at stuff.
yeah,
Um, and then we get, and there's nothing wrong with getting paid a success fee, but if someone's coming at us right away and we've already made it super clear that we can't, right, from a regulatory perspective, and nor have
right.
we, and it also makes the community feel really comfortable that we're not getting a success fee.
Yes,
We're not conflicted in
yeah,
that way. Like I said, it's a good business model if that's what you do and you're a registered broker dealer, et cetera, et cetera. But you know, um, when it's a red flag when someone is super clear about what our structure is, and then they try to convince us to take a success fee and won't tell any. Don't worry, we won't tell anybody. And I'm going, what
yeah,
do you like?
yeah.
Yeah, that's
It's
not
it's like someone wants to reinvent the rules for themselves. So you're like, no, I have a very clearly defined. I get that a lot, so I
yeah, and it's
understand.
not it's not that it's our rule. It's just that we don't want to go to jail, right? So
Yeah, yeah.
yeah.
So backing up a bit, because gosh, I mean, what we went through your story, and my goodness, it was a span of years, and that the early stage in growing that business, and everything you went through with the lawyers. I mean, I imagine a lot of emotions there. And when you left that world of scaling a startup company and developing these solutions into now the world of investment, I'm sure there was a big transition there, a lot of growth in learning the investment ropes. And I know you mentioned, you built this community literally so you could learn from your peers. But kind of emotionally, when you left that startup, was there an identity shift? What sort of things did you go through in that transition?
No, I didn't have any identity problems.
Yeah.
And I don't mean to be cocky about it, but
No,
what
it's
was really interesting for me is that serendipitously coincided with what I wanted to do for a very long time and moved to New York City.
yeah,
So I was super happy to be able to do that. Like, it was
yeah,
something I wanted to do for a very long time. And my kids were, you know, more or less launched. And so I was
yeah,
able to do it. And I continue to be an entrepreneur. Um, I don't manage anything like I managed that. Like, I had to run through walls to make sure that, and I still run through walls. I don't want to make people believe that I don't. But it's a different thing now where I've got resources where I can have others help me run through walls, whereas I was doing it all the time. But no, moving to New York City was the best thing I could have done, because not only am I learning from everybody who pitched like
yeah,
crazy, right?
yeah,
We're looking, because I was the only one looking at the decks for a very long period of time, and but then I would see them pitch, and uh, and then I'd get to meet all these people, and it was like baptism by fire moving to New York City. Like, I learned from the best. And what's really, I think the audience will find interesting and not surprising, is that often people would come and pitch, and there would
hmm,
be good deals, like fundable deals,
yeah,
or funds. And there would be a room full of really smart, rich people.
yeah,
Sometimes that's not always the case. They could be really rich and not smart. But they would learn almost in every case something from the audience that they
I
hadn't
love
thought of,
that.
even if they were a
Yeah,
mature company or a mature fund, because the people in the audience would bring up things and go, well, what about this? And the entrepreneur or the fund manager would go, wow, we didn't think about that. So I got to be the beneficiary of that.
yes,
So it
that's
helped me be
incredible.
an investor, right?
Yeah,
So
yeah.
to answer
You
your
learn from
question,
those
yeah,
different perspectives.
yeah, whatever. evolution I had to go through from, being a young entrepreneur or younger entrepreneur into moving to New York City. And I was still doing all that. Like I was
Yeah.
buying stuff and selling stuff and investing in things and building things and continue to do that. So
Yeah.
the transition was I just had more of it, right?
Yeah.
And
Yeah.
so, and I have arrows in my back from
Oh
massive
yeah.
losses and so forth too. But
The battle scars. Yeah. Well, and I know some of the best reasons, family offices make great investors is they do come with capital, but they come with, their networks, they come with industry expertise. And some of them are, depending on when they exited or made their wealth, what generation, they're entrepreneurs and they oftentimes are actively involved in the company. Are you an investor that has ever gotten involved in some of the companies you've invested in from a management standpoint?
yeah, in fact, for a long time, no, I was just an LP. But over the last 8 or 9 years, I'm largely a control investor now.
Yeah.
So I either create something and own most of it or buy something and own most of it. So I'm no longer, just because of bandwidth and where I am in my life, I'm not really interested in being passive. So I'm actually,
Yeah.
but I'm not going to be passive, but I'm going to own most of and controlling interest in what I'm not passive in, right? So
Yeah.
it's changed over the last 10 years, I would say.
Yeah.
Um, yeah. But if you don't mind, I would like to mention something as it relates to the people in the room,
Yeah.
the audience that pitch that are the audience that people pitch to, in addition to their network and so forth. One of the things that's proved to be super interesting is that if a family office is interested in investing in something, they're often bringing customers to the table. Let's just say it's a company, right? And
Hmm.
so well, we know the CEO of this company, they would be a great customer, and the CEO of that company. And so they're not just bringing money to the table, they're bringing
Oh,
business development
oh, I
relationships to
love
the
that.
table. And that happens a lot.
That's actually, and advice is, I tell people, it isn't a transaction, it's a relationship, and put yourself in their shoes. And how do you add value? You want to give, then ask. And that's an amazing way, you both can give value if you think, well, what are your portfolio companies that potentially my company can give to? And it's reciprocal. The more you give, yeah, and it goes two-sided. So I love that. Curious to know, with we always say once you've seen a family office, you've seen one family office. The members of your group, are there any commonalities, or it's each one completely unique? I guess they're all there to share notes. That's one commonality. They're open and collaborative, but anything you can give us, impart on us on the diversity that you've seen or the likeness?
Yeah, so there is a couple things. I mean, people like to ask the question, and it's legitimate. What are family offices investing now? And it's like,
Yeah.
okay, well, hold on a second. Um, uh, I would say the thing we can say that's common about them is uh, and it can cut both ways, good and bad, is unlike a pension fund or a sovereign wealth fund or a private equity fund, they're not itching to deploy the capital so they can go and raise the next fund, right?
Mm,
So
right.
their time frame is, on the one hand, good long-term wise because they don't need necessarily the income from an investment or need it liquid right away. And that could all go out the window depending on the fact pattern of the family office. But it's often is, okay, we don't, oh, you want us to hurry up and invest? Well, forget it. We'll wait. And so there's no compelling reason to deploy
Right.
capital like a fund or a pension fund that is getting money in every week and they just have to find a place for it.
Yeah.
So they can take their time. So on the one hand, that could be, a bad thing for people who are interested in getting checks right away. And on the
Hmm.
other hand, once they deploy capital, they often don't have a rush to exit because they've got a longer term um, time horizon. And some people make this is the other thing I think it's common and often a mistake is it's true that if you're a fund and you're not at the institutional level where somebody who's got to check a box that says you've been around for so long and you have so much AUM that they can't invest in you, that they shift to family offices. Well, it's not because they're easier, it's just that you can't get the money somewhere else, right?
Right.
And so
They
often,
don't have that mandate.
yeah,
Yeah. Yeah.
so it's often harder to get money from family offices. And the other thing I can say is that depending on the nature of the investment fund or company, people like that a family office has done the work, like the hard
Mm,
work of looking under the hood, right?
yeah.
And
Yeah.
so that happens a lot too, where you know you've done the work and you've got a bunch of friends that trust that you've done the work. You may have invested together before, and so a family office can rally their friends um, to make their $2 million investment a $10 million investment without syndicating anything, without setting an SPV, just saying, okay, I'm going to bring in some of my friends.
Yeah.
And so that works to your favor, right? And
Yeah.
again, it's not something you can generalize, but with every family office, it just tends to happen from time to time. Um,
Yeah.
and of course, they're private. They worry about stuff, especially now where everything's fake and you can't tell what's what, and kids get kidnapped, and you know,
Yeah.
there's the we've learned through history that one of the biggest levers to make somebody do something that they shouldn't do is threaten their children, right?
Hmm.
So, it's you got to really be careful about that kind of stuff.
Absolutely.
Yeah.
Well, and speaking of children, you have three, is that
Mhm.
correct?
Yeah.
Are any of them involved in the family office and the family office insights business, or have they all chosen their separate path?
They've all chosen their separate paths. There's a fun story. I was visiting my daughter at school, and it was like middle school or something like that. And I had a blazer and slacks on and dark sunglasses, and it was a summer day. And I'm making a quick phone call before I slide into school to go to the teacher's whatever, meeting or whatever it was. And some my daughter could see me through the window, and her friend asked her, "So what's your father do?" And she says, "I don't even know." Right?
Yes.
Um, so it's been kind of they thought I was in the Greek mafia or something like that. But
Yeah.
of course, that's not true. But yeah, no, they've all fully launched, doing their own thing, super happy, have no interest in, because I'm really just an investor, right?
Yeah. Yeah.
Um, so they they benefited from being around all that, right?
Yeah.
Um,
I'm sure it's shaped them. Yeah.
seeing the peaks and valleys, and I think aside from life in general, they benefited from understanding what it's like to have to adjust, like, okay, we
Hmm.
have to adjust a little bit. And so I think that's been a good lesson for them.
Absolutely.
Yeah,
Resilience and adaptability. Those
yeah,
are such tremendous traits that,
yeah. Not to mention I've been married and divorced twice, so that it doesn't, that helped a lot.
yeah,
I mean,
absolutely. And
yeah,
that's life.
yeah,
Yeah.
yeah.
Well, earlier, it was like gold. I think everyone on this call probably appreciated you walking us through, what makes some family offices distinct. It's that patient long-term capital, and it can be a double-edged sword because they can decide they want to take a while to make decisions, or on the flip side, they can be just these amazing long-term investors that aren't pressuring you to sell or, get returns like the world of VC. Um, what else? I mean, talking about that mindset as well and saying, there are fears in privacy. What other things about family offices do you wish more entrepreneurs who are new to this sector knew?
So Don't I think it's wise. I'll give you an example. There's a family office. All they want to do is lend against something that they can perfect an interest in and have a coupon at 17%.
Yeah.
And they've got billions to do it.
Yeah.
So don't go and pitch them on something that doesn't fit there because now I love entrepreneurs that run through walls and convince anybody to do anything.
Yeah.
So I'm not saying that an anomaly couldn't happen,
Right.
but you know, there's certain people that are just not going to go outside of their box
Mm-hmm.
for a whole bunch
Mm-hmm.
of reasons, right?
Yeah.
So don't try, excuse me, don't try to convince people to do something that there's a high probability that they're not going to do. And part of that is self-serving because they might be polite and listen to you, but you just wasted a whole bunch of time, your time.
Yeah. Absolutely.
Yeah.
Yeah.
Um, you're better off just taking, you know, I love people who don't take no for an answer, right? But don't take no from an answer for somebody that is saying no for a different reason, right?
Right.
Um,
I
not
think
not because they absolutely aren't investing in this sort of thing no matter what, right?
right, right. I know it's persistence is wonderful, but also respect and leaving a good impression behind, because it may be a no for now, but it doesn't mean if you didn't make that great positive impression that it might not be a yes for one of their colleagues. So always just being mindful and respectful. These are people
Yeah,
and people do business with people.
yeah,
Which leads me to storytelling. And I'm curious because, people will apply and they'll send pitch decks, but when they get on these Zooms, they're really presenting themselves. And often, it's that connection. And you can learn about a person and their passion and their journey through storytelling. Do you see storytelling playing an important role, or what kind of things about the founders that project and present that is attractive?
yeah. Now, can we spend 2 hours on this?
Uh-huh. We need another
So,
master class just for
yeah.
this.
Um, you have to start somewhere, right? And if
Yeah.
you're a new entrepreneur or a fund manager, you have to, on some level, do the perfunctory things, build a pitch
Hmm.
deck, talk about the team, all that business. But I think it's pretty accepted that um, a good story, particularly if it's true and well delivered, has a
Yeah.
lot more chance of getting um, a thumbs up than if you're just droning on and there's no real uh, connection with the people that you're presenting to that's over and above just, okay, you want our money, right?
Yeah.
And I would say that um, we've seen thousands and thousands of pitches, and some
Yeah.
people just suck. I mean, they're really bad.
We need to start a boot
And
camp.
yeah, right. There you go. And so um, there's, and I don't know, some people are innately better at it than others. Others can learn and get much better at it.
Hmm.
But I've seen people that don't even talk about the numbers. They just tell the story.
Hmm.
And then, oh, by the way, if you want the numbers, here they are, and they happen to be outstanding, right?
Does that
So
work?
in some cases it is. It depends on how good of a storyteller they are, right?
Right.
And yeah, no, I think that I mean, through centuries of we've learned that stories, look at mythology, for example, right?
Absolutely.
Yeah.
Yeah.
Uh, I mean, Joseph Campbell made a study of mythological studies at Sarah Lawrence College, and he was one of the most interesting people, at least for me. I know a lot of people know Joseph Campbell, but that's what he studied. He was saying, "Holy cow! every um, uh, culture had the same thing. The hero's journey, going out, leaving the village, coming back with wisdom, right? So there's
Yeah.
some merit in learning how that stuff is delivered, right? Yeah, I think
Yeah.
it has a lot to do with whether it resonates with somebody. And then you got to be careful because if you're talking to some, look, the community that we have doesn't have time to just sit and listen to web pitches.
You've got to be,
They have to be authentically interested. And then on the other hand, if it's like when we had crypto and cannabis, then people would come on who weren't necessarily investing in that, but they wanted to learn, which was totally fine,
interesting.
right?
Yeah, absolutely.
But if you're not investing in a real estate fund, you're not, and you're part of the community, you're not just hanging out on a webinar that we're doing about real estate funds. It's just
Right.
doesn't happen.
Right.
Yeah.
So valuable. Thank you.
Yeah.
Really interesting. So I know, you believe this, I believe this, the fastest way to earn the trust is really through a warm introduction to someone within the inner circle. Now, intros don't come unless you really know and trust and can advocate for the person. For entrepreneurs who are new, who really haven't gotten into the circle, what are some suggestions? What are some ways that they can kind of meaningfully grow and build connections if they're just starting out?
Yeah, it's this same old um stuff that sometimes is tiresome.
Yeah.
You've got to go to cocktail parties, you've got to put yourself
Hmm.
out there, you've got to go to the networking things. You just have to do that.
Yeah.
And it's you connection begots connection, right? The
Hmm.
conference business is in many ways a nightmare, but sometimes you just have to show up
Yeah.
and meet people, um, and pay the price or whatever it has to. We don't do conferences, as you know, we've done a couple, but that's not what we
Right.
do.
Right.
Um,
Yeah.
but I've spent my entire life, my business life networking. And of course,
Yeah.
in New York City, you meet the most interesting people, right? And
Oh,
then
yeah.
then I would speak at Institutional Investor in Italy, and I'd speak somewhere about family offices in Nicaragua. And so I would be on the speaking circuit a little bit. And
Yeah.
so I met a lot of people that way. So
Yeah.
it's a lot of hard work. It's time
Yeah.
consuming. You just have to do it. And of course,
Yeah.
a lot of these entrepreneurs come from Silicon Valley or in other parts of the country that aren't, you know, as robustly networking. Silicon Valley is an interesting place because they all want to help each other, right?
Yeah.
In New York City,
Yeah.
you go into the meeting, there's no niceties. It's like, okay, what do you want, right? Right?
Yeah.
How can I help you? What do you want? Not going to do that. What's next, right?
Yeah. Yeah.
So you have to decide, of course, it is idiosyncratic to where you are and jurisdiction you're in. So I don't mean to oversimplify it, but you have to do all that stuff, right?
You do. You
Yeah.
do. And I think too, where families maybe are looking to learn, you brought this up, with the cannabis and crypto, if you're a domain expert and you can educate, I think you can be a thought leader that becomes that magnet to an investor who maybe is interested but doesn't know, that's not their expertise. So showing up, yeah, like the way you said,
Yeah.
you go to these events, you're the speaker. I mean, that's a great way to do it, but it
Yeah.
takes work. And
Yeah, and
um
I'm not saying people should do this, but early on when I was
mhm,
building the network and really working hard at doing that, and at the same time investing and trying to, in New York City, I co-authored 3 books, right? And the
amazing.
books
Wow.
were
Yeah.
all designed they were business cards, right?
Yeah. Oh, it's beautiful. Yeah.
And so, that right or wrong gave me instant credibility, right?
Yeah.
And so, not saying that people should go out and write books, but it's not hard to do that, especially with what's
Yeah.
going on now.
Yeah,
Um,
yeah.
yeah. And
That's
look, we have a podcast now.
Hmm.
We interview people doing interesting things anyway in Family Office Insights, but we have a podcast because it's super easy to do it. Um,
Yeah, it's
and
fun.
we'll see what happens. So
Amazing.
it's been helpful.
With your group, having had it over the years, do you see the family members or do you see hired professionals? And then this leads to an add-on question. Do you see the sector kind of evolving and becoming more professionalized with kind of more, I guess, hired team members?
Yeah, so we have to bifurcate that into single family offices and
Hmm.
multifamily offices, right? So multifamily offices are basically wealth management platforms on steroids, right? And we have the
Yeah.
ones that are standalone and we have the ones that are inside investment banks. And
Hmm.
so they are often staffed with professional people from the beginning, right?
Yeah.
And then the single family offices have, and it's getting, there's a great network of people who are professionals in the family office space, and it's growing. The challenge is that there's no real, excuse me, career path in the single
Mm.
family office that has been established. Like if you go work for a bank in their family office, then there's a career, there's a trajectory, right?
Right.
um, in the single family office, depending on how big it is, how they made their money, what problems
Hmm.
they need to solve. Um, Oftentimes, a relatively new single family office will hire somebody to get their shit together, right? Okay, we're going to do all the
Probably a
estate
million
planning.
hats.
Yeah,
Yeah.
right. All that
Yeah.
stuff. And then once that's done, you can shrink it down to a fraction of what it, because if they're not really deploying capital and they're just keeping stay rich money, then there's nothing for
Hmm.
somebody to do.
Right. Right.
And then, the son of the patriarch becomes of age, graduates Wharton, and he's in there deploying capital where he went. So I'm being a little harsh on that because the career path is not uh,
Right.
has not proven to be very interesting just yet. But there are a lot of interesting opportunities in some of these larger family offices that are single and they're actively deploying capital. They're looking for expertise. They're looking for people who can really underwrite, let's say, a credit risk. And that's valuable and they pay up for that.
Yeah.
But
It's
it's not
exciting
like
to see
working in
that.
a bank where, okay, how much AUM did you bring in? Right? Okay, so you're gonna get
Right.
a bonus on how much money we made.
Yeah.
Yeah.
Yeah. There's lots of dynamics at play, and each one of those single family offices completely unique, completely
Yeah.
different.
Yeah.
Also, yeah, when were they founded and where are they in their generational wealth transfer?
Exactly.
I
Yeah.
know many of the family offices, obviously they want to maintain the wealth, but also many of them want to make an impact and many of them set up their own, philanthropic arms. Do you see a lot of kind of impact investment opportunities in your group, or do any kind of philanthropic groups ever get to participate, or is it all typically just like straight investment opportunities?
Yeah, no, there's a lot of impact stuff, and that's
Hmm.
kind of um uh you have to you people bunch impact into one big lump. Uh
Right.
um so we gotta sometimes have to dissect that out.
Hmm.
Yeah, we see the the younger generation um wants to in some cases do good in the world,
Yeah.
but they don't quite understand necessarily, not in every case, that it's often virtue signaling for their peers than it's actually measuring the impact that their investment might have, right?
Yeah.
And there's been a lot of
Yeah.
talk about you can't have impact investing and still have a good ROI, which is not true. I mean, it's
Right.
often true, but it's not true all the time.
It
Um,
could be better.
yeah, it could be better. So yeah, we see it. And again, when we look at these things in the context of approving them for Family Office Insights,
Right.
we and it's very subjective, is do
Hmm.
we think it's going to resonate with the community, right?
Absolutely. Yeah.
And if it's clearly no, then it goes in the no pile, right?
Yes. Yeah.
Um, so yeah, there's a fair amount of what their version of impact, which is
Yes.
idiosyncratic to them, right?
Yeah,
Right. Yeah.
absolutely. Yeah.
Yeah.
All right. Last question for me, and then we'll turn it over to this amazing audience of ours. But I read something that you had published, or maybe it was your team, but it was the 7 principles for entrepreneurs who want to attract family office investors. And I just think it's something if I have permission, maybe I send out the link so everyone can
Sure.
read
Yeah,
it.
by all means. Yeah.
Yeah, maybe so we'll
Yeah.
send out tomorrow or on Monday a recording so you guys can share this with others if anyone didn't get to join in the beginning, and we'll include a link to that article. But are there any principles that haven't really been brought up in today's top conversation that you want people on this call to understand?
One of them, and I think you posted something about this, is the best time to raise money is when you don't need it.
Yes. Yes.
And of course, that's counterintuitive if you've started a fund and you're about to raise money, right?
Yeah.
So if you're aspiring to start a company or a fund, then you should be doing, should's a bad word. It will serve you well if you do a lot of the work way before you're asking for the check, like maybe
Yeah.
years ahead of the time.
Plant those seeds. Yeah.
Exactly, because people they take time to warm up, they get distracted, they do something else, they change their mind. And it you need to have, to use the old phrase, a lot of irons in the fire. You need to have a lot of, I don't want to say kiss frogs, but you get my point. Yeah, something like
Yeah.
that. So
Gotta sow the relationship seeds.
yeah,
It's like cultivating a garden.
yeah. If can I share the story of how that 7
Yeah,
came about?
please, I haven't heard it. I would love to.
So there's a guy named Bill Bonner, and Bill Bonner was the original master uh, uh, newsletter guy. So he would have
Yeah.
he had a newsletter where it was called Secret Hideaways, where he'd send you as much as he could in a 7-cent envelope, and it would discuss where you could go to an island somewhere and have fun with your
Oh,
family and vacation, right? And so he started that, and he mastered the funnel marketing, where if you got through this 17-page thing he sent you in snail mail, if you got to the end, you were going to give him 31 bucks, right? And
yes.
so his job was to get people to opt out that would never give him 31 bucks. And so over time, he built Agora Publishing, which has become, massive, and through the years, and it did all the, digital newsletters, and he would have a bunch of people that would write on his behalf, but he would do all the heavy lifting to get people to subscribe and
Yeah.
design those letters and those emails that you went on forever that we all saw. And so he would um, uh, get people to opt in and put their credit card. And so great guy. Um, the name of his yacht is Auto Renew, because everybody would
Oh, that's
forget about the
awesome.
$31 that
Oh
they,
yeah.
and so anyway, he's great. So he had me come speak at his family office group,
Yeah.
and he said, "Why don't you do a newsletter?" And I said, "Well, that's the last thing. I mean, I'm not a writer. I wrote the books because somebody else wrote them and co-authored with me. They were, I'm not always suggested I'm a writer." And so I wrote that for him
Yes. Oh
as,
wow.
and it took me months. And
Yeah.
then he said, "Okay, so we're going to do a newsletter with you. And so for every dollar we make, you get 6 cents." And I'm going, "Okay, I'm done." Right? Because he had figured out how to do all the heavy lifting, spend all the
Right,
money.
right,
So
right.
but that's how that all came about. And so
Oh,
it's,
I love the story. The
yeah,
context. We'll all appreciate it that much more.
yeah,
Thank you for
yeah.
that.
Yeah.
Well, we are almost at the top of the hour. I have way too much fun with these conversations, and I will turn it over. I know there's a couple questions in the
Sure.
Q&A. Richard asked, can we save the chat? And it's funny, just before I was looking at the Zoom settings and I clicked it over, so the chat will be saved, and maybe I'll send it as an attachment with the recording
That
because
would
that's
be
always
awesome.
fun.
Yeah,
Yeah, I'll send
we
it to you,
save.
Arthur.
I don't know how yours is set up. When we do our webinars, when we
Yeah.
record them, it records the chat.
Oh,
And so
I'll,
we,
Zoom,
yeah,
there's
it's
always new updates. And
yeah,
so
right.
sometimes
Yeah.
they'll change things on me, but
Yeah.
yeah,
That
I'll
would
look
be
into
super
that.
nice to see as well. Yeah. Thank you.
Yeah, it's fun because we've got a great, amazing
Yeah.
audience here. Um, let's see. Anna, Annette, Arthur, what is your most favorite part of what you do? That's a great question, Anna.
I have to admit it's all mine.
Yes.
Right.
Yeah,
So,
that's awesome. Yeah,
yeah. I
I
have
took,
to maybe another way to answer that. My sister also never knew what I was doing for a living. She's an artist and super nice. And she said, "Well, are you in like Denver?" And I said, "No, I'm in Utah." And he goes, "Are you retired?" And I go, "I don't think that's ever going to happen." So
yeah,
the point is, I don't know why I would stop doing all this. I'm having way too much fun. Yeah. The whole thing's
I
fun.
love it.
But
I
thanks
love
for
it.
asking. Yeah.
Once you get bit by that entrepreneurial bug,
Hmm.
it comes with the highs and lows, but you can never turn back.
Yeah, totally.
Vera,
Yeah.
hi Vera. She asked Arthur, what was the hardest part for you in transitioning from founder entrepreneur into investor? And I know, I guess this may have been from much earlier. I think I asked that, but knowing what you know now, oh, this is a good one. What would you have done differently when starting out with the family office or investing in this case? Yeah.
I would have been just a lot more organized. I mean, we were the worst of the worst. Documents
Hey,
here, spreadsheets there, you know, not doing all the formation documents right, not having structured and thought about the taxes and investing in things. Yeah, no, I would have hired somebody that knew all that stuff early on instead of being cheap and not spending the money. Yeah,
hey, that honesty,
yeah.
it matters. Yeah. Um, Kate, great to see you. Arthur, first, I appreciate your candid responses. Is there anything in particular on your radar as family offices wealth transfers from G1 to G2, G3, et cetera? What conversations are you hearing around this?
Yeah. So pretty much what you've heard in the marketplace. The next generation really doesn't want dad's JP Morgan guy, and I'm not picking on them. I'm just saying, right? Um, the old school AUM banker is at risk, and they can fix that, right? If they're not burying their heads in the sand. Um, but the whether you buy into the crypto thing or not, people are worried about the national debt and the way crypto is, Bitcoin in particular and Ethereum and so forth. People, the younger generation and the transfer of wealth, even if the younger generation's 50, they're looking at this and saying, all right, wait a minute, what are we missing? Right.
Mm-hmm. Yeah.
And so I think that is one of the things that people are looking at pretty diligently is okay, stay rich money, stay rich money. The traditional stock and bond portfolio will probably be fine for part of it, but um, uh, we have to worry about the national debt. And so what are we going to do about that?
Yeah. Thank you for that. I know it is the top of the hour. I see Camille Holmesy's name in the Q&A, and there are several more. Arthur, do you have a hard stop? I want to be respectful of your time.
I have a couple more minutes, but I do need to,
Okay.
yeah, but
We're going to take this last one from Camille. Camille was an amazing guest of ours in the past.
yeah.
Arthur, hope you're well, enjoying living away from NYC. In and from the stereotyped labels, please share the value of the allocator, his or her skills in constantly expanding knowledge and the network adopting to market trends and the ongoing oversight of the portfolio composition, recomposition of the portfolio?
Yeah. Indispensable, right? So what often happens is the person who made the money in some sort of way will want to keep their hand in the grocery store that they built, the chain of
Mm-hmm.
grocery stores that they
Absolutely.
sold. And so they want to be in that business or keep their hand in it. Um, but if they've started diversifying their portfolio to have stay rich money,
Mm-hmm.
then they have to that the role of that person is paramount because they have to have confidence that they're not going to screw it up, right? Because the the role of stay rich money is exactly that. Let's stay rich.
Yeah. Yeah.
And so and I don't know how to do that because I built grocery stores.
Right. Right. Yeah.
So the role of that person, if I'm answering the question, is absolutely essential.
Yeah. Well, that I'm glad we made time for that last one. That
Yeah.
was great. And
Yeah.
Arthur, thank you so much for joining us today. This has just been so much fun. I've learned a lot, and I know from the comments and the questions everyone else has. Before we wrap up, how can people find out more about you and your work? What's the best way to find you?
Yeah.
LinkedIn, online?
LinkedIn, email AAB at familyofficeinsights.com, AAB at familyofficeinsights.com. Well, familyofficeinsights.com is fine.
Amazing.
LinkedIn,
I'll share
super
that with
happy.
your
Yeah.
permission in the follow-up.
Yeah.
Perfect.
Yeah. Super happy to have a
Awesome.
chat. Yeah. This has been
Wonderful.
amazing. I really appreciate it. Yeah.
Oh, my pleasure. Well, thank you everyone for attending and look forward to our next session.
Yeah. Great. Thanks,
Enjoy the rest
Daniel.
of the day.
Thank
My
you.
pleasure.
Bye-bye.
Bye, everyone.